Now, the bad news there, as you indicated on your slide, of course, is the non-oil sector growth, which is still weak,
yes.
0.76%. How worrisome is this?
I think it's very worrisome because it just essentially means that the economy is just being driven by oil prices. And so it was basically the narrative that was going on some 2 years ago when we went into recession. It was really so because oil prices are back up and because oil production, there's been some stability in the Niger Delta area, and so then that's really what is just keeping us going, really, because the real sector, we saw a depreciation, a decline even in agricultural activities, although that is expected as well because harvest, the latter part of the year, H2, is usually the time when agricultural activities are at its highest. So at the beginning of the year, we did expect to see a little bit of softening, but it was steeper than we expected. And also looking at trade decline, real estate declined further, construction declined, despite the fact that there was increased spending by the government. But then I think it's worrisome, really, because it then means that if the real sector isn't performing well, because this sector accounts for over 90% of the entire economy, then it just means that it's just all cloud and it's not really.
And how do you think these numbers we've seen on the GDP will drive MPC consideration in today's meeting?
I think it'll be a primary consideration for them. We are expecting to see maybe some change, a policy move, but then.
What kind of change?
We're projecting a decline in interest rates by about 50 basis points, but then I think that's just because
someone said 100. My first guess.
Yeah, I was listening to that. 100. I think that's a bit.
Is that going to happen?
I think that's a bit optimistic because they've proven that to have a hawkish stance where they're just either they're not going to move the rate or they're going to increase the rate. Because we have the likes of multilaterals like IMF actually saying that we should increase our rate. So I think that if that's an optimistic, even our 50 basis point is optimistic. That's what we feel that they should do, not what that we think that they would do, considering what they've done in the past. And so it's just re-looking at all the economic information that's out there, with inflation declining, looking at GDP, although it is weaker than what it was before, it's still better than a year ago, and just looking at all prices, everything, the budget, and so it's what we think that should be done. Interest rates should come down, especially as we just discussed. The real sector is suffering at the moment, and so that would really help to bring down interest rates. Would really help that real sector. Okay.
Now, one other issue you talked about as part of the burning economic issue is flour, which is expected to increase from July 1. Why?
So this is just. I think, first of all, the wheat prices have actually been declining. So I actually do not know why they plan to increase this. This is the second increase, actually. The first increase wasn't an actual increase because it was initially this discount during Christmas. They brought down the prices. So they literally just returned it to the previous prices. But then now they're increasing prices in a climate of declining wheat prices. Although they have been, in the last couple of days, there's been a rally in the wheat prices in the global market. And in a lot of the year, I think net yet-to-date wheat prices have lost almost 10%, and in the last week they've recovered some of this. But I think that it's just maybe looking forward and looking at where wheat prices are heading. I think it's just the manufacturers are just taking a stance against the future, long-term trajectory of wheat prices. Okay, so what will be the implications for commodities, that are produced with flour, particularly bread, which is staple food for most people? So they haven't said by how much they're going to increase the price, and I think that would be essential. And also, it may not be as widespread, so it's not all the producers or all the manufacturers of flour who might follow this price increase. So it depends, first of all, on the magnitude of the increase and how widespread this is. So whether it's everybody that is increasing their prices, or it's just one or two people who are increasing their prices due to increased costs. Is it possible that even when it's just one manufacturer that increases the price, is it possible that the price in the market, perhaps the bread price, will not increase in Nigeria?
Is it possible?
I think that it is, except if the other producers follow suit. Because if they see that, okay, one person has increased, so if, you know, the way that the flour market works, it's an oligopoly, and so usually with oligopolies you have a price leader. So if one person who is the price leader increases their prices, then we'll most likely have the other people follow suit, and then that would now have a trickle-down effect on products like bread and confectionaries which are made with flour. But if the person who increases the manufacturer which increases their prices doesn't have that much weight in the market share or in the, it's not a price leader, then that may not have such a significant impact. So I guess we'll just wait and see how widespread and how significant
from July 1
is. From July 1st, yes.
Sure.
That's the plan.
Now we've seen some kind of pressure in the exchange rate, particularly in the parallel market. How would this impact food prices and you know, other domestic commodities, and in turn May inflation rate?
I think also for May inflation rate, it may not have a significant impact because I mean the naira only started to depreciate towards the end of May, and most food commodities or most commodities had already been brought in earlier than that. But then I think that the major impact. So the reason, first of all, for the depreciation that we've been seeing, although it depreciated last week and is appreciated as at this morning, but then the main driver is usually just, first of all, the budget has been passed. We expect to see a lot more credit lines being opened as the government starts to spend money on construction and having to bring in construction raw materials. So that would have put some pressure on the naira. But then also it's summertime. There's more requests for tourism and purposes and all that, and even going back to even school and paying for school fees and medicine. So it's a lot of different reasons for the pressure being applied.
All right, thank you very much, Damilare, for your time. Damilare Adesola is one of the research analysts with Financial Derivatives Company.